Hey everybody, what's going on? It is Friday, September 15th. It's September 15th, the day I've been warning you about for months. Tax drain day. So the market pulled back. Yesterday we had a big rally, but today both the Nasdaq and the S&P erased all of the week's gains. Dow almost erased all of the week's gains. And this is what I've been telling you is going to come. This is the cyclical period of tax drain. Nothing to get all concerned about. We have to just move through this. The only thing I would say is we got to keep an eye on what Congress does at the end of the fiscal year, which is September 30th. They're going to have to come up with at least a continuing resolution to keep the government funded. Otherwise, we're going to get a shutdown. And if we get a shutdown, like I've been telling you guys, that could have additional negative impact to the fiscal flows. But the big picture remains the same. This is just a correction within a bull market trend, a solid economic growth trend. And so you want to take advantage of this, and I will let you know when I think it's time to move back in. Actually, I've already given you kind of like the plan going forward. It's in mid-November, all of these flows will stabilize again and start to move higher with the quarterly interest payment in mid-November. And we'll move into like mid-December. There's going to be another tax drain, quarterly corporate tax drain in mid-December. And then by the end of the year, maybe the second to last week or the week before the end of the year, and then moving into January through mid-February, that's all positive. That's all positive. So, I mean, I kind of, laid out for the next 5 months exactly how it's going to play out. But I still want you to keep in mind that the overarching macro picture is still positive. Okay, I don't care what you read in the headlines or anything else. As a matter of fact, as you know, I always say those are fantastic contrarian opportunities. When you hear them talk about, oh, this is it, and another crash is coming, and it's going to be like a second great financial crash, and inverted yield curve, or the Michael Burry, or the death cross, all those things are ridiculous. And just, keep your wits about you and understand what the macro picture is. Remember, I've used the analogy of the mariner out there on the open seas. You have to know your course, you have to know where you're headed, and that'll get you to where you want to go. I actually spent last night, I was camping out at Joshua Tree National Park out here in California. It was great. I went there last night for a reason. It was the new moon, which means no moon, dark sky, and I saw a tremendous star show. Was fantastic. And on the way there, driving up the Joshua Tree, all of a sudden I'm looking out the car window. I see this very bright vapor trail in the sky, the dusk sky, and that was I think that was a SpaceX rocket launch. And then you could see the vapor trail all squiggly white, and then you could see the capsule. It was really cool, really, really cool. And so I camped out, had a tent, camped out, had a great time out there, and just got back to LA a couple hours ago. So that's basically the update. The flow, yesterday we had a 23 billion drain. That was, I guess, some lead up to today's big drain. Which we'll see the numbers on Monday in the daily treasury statement. And again, folks, if you guys want to learn how to work that daily treasury statement and parse through those numbers so you could keep a running record of what's going on in terms of the flows, then I would recommend you buy my course, Understanding the Daily Treasury Statement. It's $99 on my website, pitbulleconomics.com. Again, that is a free resource put out by the government, the federal government. Nobody pays any attention to that. That is the most powerful, for lack of a better word, resource that you can have. I mean, that gives you the flows, and nobody's looking at that. Nobody understands that, which gives you a tremendous advantage over everybody else. Remember that most economists, all economists, are looking at historical data that the government puts out 30 days ago, a quarter, last year. And that's like, again, driving your car by looking in the rearview mirror. You want to have that forward view. And the first derivative of everything, as I've always said, are those fiscal flows. Everything else is a derivative off of that. So with the understanding of those flows, you can project ahead what is going to happen. And as I've explained in the past, all these things are on a calendar. It's not like they pop up. Oh, that was a tax strain that was coming. No, we know. Every quarter there's a tax strain. Every quarter there's an interest payment. There's the big tax strain on April 15th every year. There's the end of the fiscal year. I mean, we know all these things are scheduled. Social Security benefits are scheduled. Military pay, Medicare, Medicaid, veterans benefits, disability, all those things are scheduled. So we have an idea already in advance of what the flows are going to look like. This is, we're seeing now what I've been telling you for months is going to happen. Just like now I'm telling you what's going to happen in mid-November, mid-December, end of the year into mid-February, all ahead of time. It's like I'm not looking at any lines on a chart or anything like that. Believe me, folks, it's all about these flows. To repeat myself, that is the first derivative of everything in terms of economic activity, which then correlates to what the stock market is going to do, what risk assets are going to do, what the dollar is going to do, foreign exchange, etc., gold, silver, even oil. Although that's something that is a little bit more nuanced because you have a cartel, OPEC and Russia, which can be a very significant influence on the oil market. But at the end of the day, it's really all about economic activity. And so you want to keep that in mind. That's the big picture stuff, very important. And if you have an understanding of that, you're going to be way ahead of the game. Just stay calm, don't get all panicky. Use the headlines as a contrarian indicator, and you will be fine. Anyway, that's it for today, folks. I'm going to go enjoy my Friday afternoon. I hope you are, or whatever day you are on, and have a nice weekend. Maybe I'll see you over the weekend, if not on Monday. Bye.